Hi Andy, how are you doing?
I'm good. Thanks, Andreas. How are you?
All things great here in Düsseldorf. The weather is not particularly like spring, but maybe that will change in the coming weeks. Don't know. All good. Andy, thanks for coming around again to talk about markets. So I will introduce you quickly to those who don't already know you. You are the team leader and of fundamental modeling in Baden, Switzerland, and as such, an analyst. And you look at the markets all the time, and you have seen the strong up move in power and in carbon prices, and that's what we are going to talk about today. So thanks for coming around.
You're welcome. Thank you to be in here.
Cool. All right. So yeah, as I said, I mean, power seems to be an up-only market. There's no down move since kind of Corona started last March. So it's a bit of the same for carbon. So Andy, what's going on?
Yeah, carbon was effectively one of the key drivers of power prices lately. You're totally right. And indeed, the increase of carbon prices was more like driven by gas prices, which at the same time, of course, were influencing power prices as well. Gas prices saw quite an upward move over the last couple of weeks and months as we here in Europe experienced a fairly cold winter. That cold winter triggered higher than normal energy demand, gas demand, and with that, gas inventories, gas storages dropped to below normal levels for this time of year. So the market became very tight, gas prices increased, and then when you think about it in terms of carbon, that means if gas prices go up, it opens kind of a door for coal power plants to come back in to replace them in the merit order of power markets. But when coal plants come in, that means we have higher carbon emissions in the system, in the power generation stack, right? And this higher demand for carbon allowances eventually triggered higher carbon prices as well. A second point here is that over the last couple of months, we saw that fuel switching from gas, from coal plants, hard coal plants, into gas plants, as those are the more cleaner forms of power generation. But that still left the dirtiest of the fuels, the lignite plants, online. In order to get them out of our mix of power generation, carbon prices really had to send another cost signal and had to rise much further to bring those dirty lignite plants out as well. And that was the second point, what happened in the last couple of weeks. And thirdly, last but not least, we are right now in just a couple of talks on the political level about the future green ambition of the European Union. In that talks, most of those talks have only one direction, which is getting greener. Getting greener means pretty likely carbon prices rising, and that attracts new investor classes like speculators, but it also attracts a little bit of a change in behavior of utilities, of carbon emitting companies not selling allowances anymore, but holding on them. So that change of behavior, new investor classes coming in, was kind of the third trigger for those higher carbon prices in the last weeks and months.
All right, so let's stick to what you mentioned third, like the politically induced price action. So on the European level, there's something really going on. So could you shed a bit more light on what's going on there?
Yes, of course. In Europe, we currently have a legislation which calls for a reduction of greenhouse gas emissions by 40% versus 1990 basis by 2030. This is the basis for the current design and the current setup of that EU trading system, the EU ETS. But as I said, on a political level, EU is currently discussing to increase that green ambitions. They are investigating, can we maybe increase that saving target from that 40% to 55 or even 60% by 2030, and that as a stepstone towards the final goal of being carbon neutral by 2050. That is what's going on right now. We are currently in the middle of those negotiations between the EU Council, the EU Parliament, trying to work that out. And we would expect a solution, a final legislation to be kind of set and done within the next couple of weeks. Afterwards, the European Commission will come up and present a package, which they currently call Fit for 55 package, in which they propose how to translate that new legislation into, for example, the carbon trading system framework. One of the questions, for example, will be the sharing agreement between the sectors which are covered in the EU ETS and the sectors which are not covered into the EU ETS. Which of the sectors have to bear a stronger burden to that? Which one is easier abatable, maybe also from a cost perspective? Another point they will discuss here is, when can all that be implemented? Can we do it as quickly as in 2023, 24, for example, or will it take a bit more time and we only be able to implement it by 2026? All of that, of course, depends when and how quickly that carbon market will tighten. So that's one of the key factors for the coming months to watch out for.
Yeah, I remember back then when the market stability reserve was introduced, it was also to a large degree a discussion about timing, when to put it in. And maybe let's stick a bit to that. Could you maybe talk a bit more about the market stability reserve, about the kind of reforms which are maybe planned there? Also, there seems to be a big discussion around the carbon border adjustment mechanisms, which might or might not be in place. And also, just in the beginning, you mentioned maybe kind of the speculative moment. And in how far do you think that matters in the market?
You're definitely right. Next to that translation of the climate law into the framework of the ETS, the Commission will also take that opportunity of overhauling the whole carbon trading system to look at different other topics. And one of them, as you said, is speculation. It's pretty tough to accept that speculation goes too high, maybe triggering too high carbon prices, power prices, energy prices, especially for the European industry. On the other hand, speculators tend to bring liquidity into the market, making trading possible in the first place. So the Commission will look at that topic, and they will look for a very good balance between those pros and cons of speculation for a market. They will also look at that carbon border adjustment mechanism topic, which you touched upon, which is a little bit of a tricky thing, because right now, we try to defend our internationally competitive industries by giving them free carbon allocation.
Right.
And don't burden them with too much of the carbon prices. But when we would introduce a carbon border adjustment mechanism, which would basically price the embedded carbon emissions from imported products, then we wouldn't need those free allocations domestically anymore. So putting that in place is a delicate dance, I would say, especially from that legal World Trading Organization perspective. So that's going to be something the Commission will be very carefully look at. They will also discuss with all our international trading partners how best to implement a thing like that. So that is something I would put a little bit of a question mark to it if that happens and when it happens. And then last but not least, you also talked about the market stability reserve. You might remember a couple of years ago that market stability reserve was introduced because of a huge surplus of free allocations being available in the market, triggering a drop of carbon prices to 10 euro and lower. So far below that price level we need to trigger abatement and carbon savings. So they implemented this tool basically, and that tool helped to bring that surplus down quite drastically, and was also one of the factors with that why carbon prices went up. Now we are at the point where we review the functionality, the fit for future setting basically of that instrument. There are chances that it's going to be tightened further, or that it remains a minimum kind of price floor tool for the market. So also here, Commission will look at the different options, how to design it for the future. We'll discuss it with the Council, with the Parliament, and then afterwards we will see how severe any changes will be.
Andy, I was trying to read between the lines a bit. So you're pretty bullish, right?
I am pretty bullish. Yeah, definitely. Alone the headline going from 40% emission reduction targets to a 55 or 60% target really means the job is not done with what we have seen so far. It's not enough to only replace hard coal and maybe lignite-fired power plants by gas plants. That will not be enough to meet that 55 or 60% target. We will need to get rid of part of the gas fleet, gas burn in the power sector as well. We will need prices high enough to incentivize steel smelters, cement industries, etc., to invest in new lower carbon technologies in their workflow. And all of that is expensive. And all of that with that needs a carbon price high enough to trigger those change in behavior, those changes in investments and so on. And so that basically brings us to our fairly strong belief and high confidence that carbon prices are going to rise in the future. How strongly is a second question, and that basically comes back down to all those matters we talked about, what the European Commission will present in a couple of weeks' time, probably in June. It might be that we end up at 60 euro or 80 euro or 100 euro. That we really have to see what comes out of that political process in the weeks to come.
So yeah, nothing for the bears today. and
not really, no. You know, we always can have setbacks, and especially around those decisive meetings, we tend to have higher volatility, which also can bring at times lower prices. in the very beginning, I also said gas prices triggered that rise in carbon prices to some extent. So if gas prices for any reason would see a down move, then this could temporarily at least also bring carbon prices a bit down again. But the mid and longer term trend, I strongly believe, goes more north than south.
All right. So you just gave me a good segue to announcing maybe that we'll have a catch up on this particular topic later this year. And yeah, nice. So yeah, thanks for today, Andy. I found it very interesting. And yeah, have a nice one.
Yeah, thank you very much.
Thank you. Bye-bye.
Bye-bye.